Hi, I'm Michael Choi, the founder of Area Specialist. I'm with Lan Nguyen. She's my personal and business accountant. She's the founder of Success Accounting Group. She's a chartered accountant and financial planner. And today we're going to discuss the changes from the 1st of July 2019 regarding tax.
Hi everyone, it's my pleasure to share with you the following, and so listen up because there are a lot of changes that are happening from 1 July, particularly for property investors. So shall we start, Michael?
Let's get into it.
Okay.
So Lan, I've got some clients that are thinking about selling their property. Is there steps that they can take before they put their property up for sale and also after they've sold their property to minimise their capital gains? So capital gains, for the viewers that don't know, is the amount that you're making, the profit that you're making from the sale of the property, and you have to pay tax on that. So we want to minimise that tax that is payable.
Okay. That's a great question, Michael. Obviously, you know, I can go in general, like the tax strategies. I mean, there's a lot of tax concessions, how to minimise capital gains and the timing. But let's just say like you have one investment property and you're thinking of selling. I mean, the number one thing is that I look at is, have you held that property for more than 12 months? Because if you held that more than 12 months, you can by default get 50% discount on the capital gain. So if you need to sell something and you're holding it for 11 months, we'll make sure that you tick over the 12 months, one day, because then you pay 50%. And on 100,000 capital gain, we're talking about 50,000, and tax at 50,000 is 8,000. So that's a simple number one strategy. Number two is look at the timing. Today, if you're close to 30 June and you want to sign the contract, maybe sign on after 1st of July. So that means you have another 12 months to pay that capital gain. During that time, you can put your capital profit or capital gain into a interest saving or some return on the investment of that money, and then that way you can defer that tax that you're paying as well.
Yeah, cool.
Okay. Number three is all the capital costs that you can claim to reduce capital gains. So as I mentioned in my prior video, so stamp duty, legal fees to buy and sell, selling agent fees, the works. So if you did works to like put display display furniture, improve the property before selling, all that capital works can be claimed and reduce your capital gain further. Okay. And obviously, if you're one of our, if you're a stable property investor and you had the property in a family trust or not in your personal names, then obviously your accountant can further reduce by looking at how you should distribute to your beneficiaries so that you're not 100% paying for that capital gain, but you're spreading across many beneficiaries. So they're just some of the strategies that are quite popular to use. The last strategy that I will give you is the 6-year concession rule. This one will help you to not pay capital gains at all. Okay, so this rule is that if this property, and it only applies, I mean obviously there's criteria to make it work. So if you had that property before you convert it to investment as your main residence, and you rent it within less than 6 years, and then you sell for while it was an investment property, then potentially you don't have to pay capital gains.
So if it's your only property, or can you have two properties?
Yeah, you can only pick one property during that time period as your main residence.
For that 6 years.
That's right.
Yeah.
So I mean, it's someone that is probably transitioning from one property to another property. But if
this was their first one, it was initially it was their principal place of residence. They've moved over to another property, but you can still keep this as a principal place of residence for 6 years.
That's right. Yes. So if you want more information on that concession, because it's very tailored and custom, so if you want personal advice on if you're eligible for that, or if you're looking or thinking about selling a property, the best thing is to get in touch with your accountant, because the best time to decide is actually before you sign, because after you sign, it's kind of locked in.
Yeah.